These webinars are standalone, but equally for those on the Elevate support, then they're there as extra resource for you, and we will be making reference to some of the things, some of the ideas and concepts that we cover. We'll pick up in the one-to-ones as we go through with you with the support. So, as I say, they're part of a series of 7. This is the second one. So we did the last one a couple of weeks ago, how to keep your company alive in times of crisis. This one is 8 ways to reinvent yourself in a crisis. Each of the webinars are about an hour in length, and we're going to deliver them at this time every other week. They are all recorded. They're going to be made available on our YouTube channel and on the page for where you can download then also the workbooks that go with them, or ebooks, not workbooks as such, but the ebooks that go with them. Over the course of the 7 webinars, the aim is that we explore practical ways to build a bit more resilience into our businesses, and to rebuild some of the value that we may have lost. But it is a bit more than that, because it's also, if we go back to that analogy of, if your house burnt down, would you rebuild the house exactly the same as it is, or would you take the opportunity to rebuild your dream home? Then we're looking at trying to build the kind of business that we really want, that is less reliant on us as an individual, be fun to run, but also to be worth something, to build that business as an asset in its own right, whilst enabling us to keep control and to deliver the kind of profitability that we're looking for. So there's the title for today, and we're going to look at some interesting lessons, maybe surprising to some of us, from owners that have had the courage to do something a bit different, maybe to pivot in times of adversity. Not necessarily this crisis, but possibly in other crises as we go back. So what have we got in store for the next 60 minutes? We'll aim to finish by 2:30. So we're going to look a little bit think about how to pick the parts of your business that are worth keeping. So thinking about what we need to keep and perhaps what we should be getting rid of. We're going to look at how one founder of one business used the crisis that he was in at the time, not the COVID crisis, but to exit from 6 of 7 business units that they had, and to really focus right down on one, and do that very successfully, resulting in a double-digit sale. We'll look a little bit about some ideas and getting us to think about the use of digital and virtual channels to maybe bring our products and services to market, maybe when the traditional business model is compromised a little bit. And we look at the idea of leveraging social media groups a bit. And we're going to do all of those things by looking at 8 main case studies. There's actually a few more businesses than that, of business owners that have launched during a crisis and then exited their businesses after scaling it. And we're going to do that along with a handful of local examples of business owners, how they're adapting during the crisis. And the examples come from a combination of interviews on a podcast called Built to Sell, which a gentleman called John Warrilow runs, and also our own podcast, Scale Up Radio, that I deliver. So that's where some of the case studies have come from. So in the words of Winston Churchill, never let a good crisis go to waste. So that's part of what we're doing, and that's a quote that's been adapted and adopted, if you like, by many people since, including Rahm Emanuel, who adapted it to extend it to say, okay, don't let it go to waste. But what he means by that is it's an opportunity to do things that you think you couldn't do before. And of course, we're seeing examples of that all around us. I mean, who would have thought, for example, that we get such a large percentage of the workforce in this country and globally, really, working remotely so quickly? And who would have thought, from a client delivery point of view, particularly for service companies like ours, how much of that would be done by things like Zoom, like we're on now, and of course other web conferencing platforms are available. But who'd have thought that would happen so quickly? If we think about in times of a crisis, many military veterans refer to something that, like the fog of war, to describe really how difficult it is to make decisions when you're in the battlefield in the midst of a crisis and you've got imperfect information. And it's in times of a crisis we can get blinkered, and we looked a little bit at the last webinar about the change curve and going through the various stages that we do, but we can get blinkered into we just see the urgent and forgetting or not seeing what might be important and perhaps is a little bit less urgent. So our decision making isn't necessarily as good as it could be. And sometimes the obvious answer in retrospect is not so apparent when we're in the throes of the crisis, which is really the basis of why we wanted to share some of these stories of 8 owners who took really bold and decisive action in their businesses in times of deep economic uncertainty. And the first example of that is from a lady called Stephanie Breedlove. Now, she's Canadian, and in 1992, that's the time when she launched her business. It was a time when around 10 million Americans were out of work. The country was facing record deficits, and the poverty and the welfare rates were really, really high. Family incomes are losing ground to inflation, and jobs were being created at the slowest rate since the Great Depression. And that's when Stephanie started a payroll company. And rather than compete head on with the big providers, she decided to focus on providing payroll for parents who had a nanny, so individual families who had one nanny. At the time, she was working for Anderson's, and she had a young daughter and a nanny of her own. And Stephanie spotted the opportunity because she was struggling to find a payroll company that was interested in providing payroll for her own nanny effectively. They were really only interested in providing payroll for bigger companies with multiple employees. And overall, she was only looking at a tiny slice really of the payroll market, yet she developed a business into one turning over $9 million, and that 20 years later she sold for pretty staggering $54 million. And the key thing that she did, or one of the really key things that she did, was to focus on a narrow niche. And in fact, she got to a point in her business when she was growing it, so about 3 to 4 years in, when she'd already got a reasonable number of customers and she got around about $500,000 of turnover, and she was faced with a decision as to whether to diversify into providing more services for the current customer base, or whether to remain single-minded about finding more and more customers that needed payroll services. Now, so it would normally be really good advice, and it would be something that many growth coaches would talk about, is selling more to an existing customer base. That's probably the one area that you might look at first. What else can we do with your existing customer base? But Stephanie realized that remaining focused on building that customer base would give her more benefit in the long run, and would ultimately bring or build a much larger and much more valuable business and be more attractive to a potential acquirer. And that's exactly what happens. As I say, she sold for $54 million. So the lesson from Stephanie is around doing one thing and doing one thing really well. And the idea of focus and doing that is further illustrated by 2 great examples of Worcestershire-based businesses that I've interviewed on Scale Up Radio, and they've benefited and come out really well in this crisis. And one of these, Matt, is on the call right now. So Matt set up the name label company, as you mentioned earlier, and that they provide exactly what you'd expect they would do from the name. So if you all of us, or many of us anyway, will probably have had the hassle of labeling up our socks for our children, for their PE kit and the rest of their kit, so that there's at least some chance of them being returned when they leave them on the changing room floor at some point. So, but his focus over the years has led to several innovations, including stick-on labels that survive dozens of washes, so they don't come off after 1 or 2 washes. But not surprisingly, And Matt will tell you if you told him, but the school market dried up. He just mentioned that it's starting to come back, but the school market dried up at the beginning of the pandemic. But because his business was so clearly known for the focus on labels, the NHS came knocking on his door looking for labels for PPE. And that was one of the things that really helped Matt to survive during the crisis, and potentially, now that he's coming out of it, to thrive even further. So that idea of focus. Another lady here called Amy Marshall set up a fitness and well-being business, and she was really, really focused around keeping people moving and healthy, and that was her primary purpose. And that led her to be really focused about her ideal clients. She didn't want the ones that just came ad hoc or whatever. She wanted ones that really were prepared to get engaged on a regular basis. And about 4 years into her business, that enabled her to move from a pay-as-you-go type model to a membership model, or a recurring revenue model, if you like, with online booking and classes and other support. So it's a membership package of which a whole range of services were included in that. And that meant that when the crisis hit, when lockdown happened, that Amy was able to retain the vast majority of her customers and indeed attract new ones, whereas many fitness coaches and gyms, as we know, have gone through a really torrid time in that respect. So she's been able to retain something like 75% of her membership, but then she's increased with at least that equivalent that she's lost through new members over that time. And that's largely down to being really focused and clear on what she did, which enabled her to have that recurring revenue model packaged around it. And the temptation that many of us face in a crisis is to grab at any revenue opportunity that we come across. So we think, okay, we need to diversify into that bit because we can't do this bit. And often that can be the wrong thing to do. It can lead to a dilution of what makes us really great and what people know that we're really good at. And of course, if we dilute our message at this time, then we just get lost in the melee of everything that's going on. So in times of a crisis, we're generally better off being really and remaining super focused on our niche, and even actually thinking about niching down even further to something that we really, really are the best at, very, very good at, and focusing on differentiating even further from our competition. And I know, some of us have looked at this before. This is the idea of the hedgehog. So lesson one, or challenge one, if you like, if you're going to go away and think about things, is around focus. So our challenge to you really is, what is your hedgehog? And certainly on a one-to-one basis, we can talk about this a little bit more. But the idea comes from Jim Collins, the author of Good to Great. And the core idea is the hedgehog does one thing really, really well when the fox comes along, and it repeats it every time. It rolls into a ball and it sticks its spines out. It doesn't try and run around and outrun it around the back of the shed or something like that. So what we want is a hedgehog for our business, and we find it by the intersection of three things. So essentially, what do we love doing? What are we passionate about? What are we really good at, ideally the best at? And what makes us money? What makes us the profit? And if we're missing one of those elements, then we end up with something that doesn't quite work. So as you can see on here, we can either be happy but poor, we can be rich but bored, or it can just be a dream if we don't have all those. So challenge one is around thinking about what is your hedgehog? What are you really, really good at, and that makes you money? So the second example, moving on to that, is around, it comes from the time of 9/11 and the aftermath of 9/11. And during the time that came after that, most Americans actually believed that they were at war. The crisis paralyzed many business owners who became really worried about what would become of the world, and spending stopped. So not unlike what happened a little bit here. The stock market fell through the floor. And at the time, a gentleman here called Sonny Vanderbeck, he owned and operated a web hosting company called Data Return. And he had a $1 billion acquisition on the table from Compaq, and that just went up in smoke completely because of that. So he took stock. Data Return was burning cash, and he figured that they got about 6 months to get a deal done before they would literally face bankruptcy. So he continued to look for a buyer, and he did receive another offer from a technology consulting and software business that was rolling up IT companies together to make a group out of that as a VC type company. And Van der Beek agreed to sell Data Return in return for stock in the roll-up IT services business. But he realized he'd made a mistake. Soon after the transaction closed, he realized that the acquirer was suffering from the consequences of going too fast on that buying spree, during which they'd made something like 40 acquisitions, and they'd bitten off more than they can chew. And a little over a year later, they did declare bankruptcy. So Van der Beek had gone from days from having $1 billion deal to then owning shares in a bankrupt business. But he still had his original Data Return partners and investors that believed in him. You might find that hard to believe, but it was not all of this was in his control, of course. So he assembled the team again together, and they bought the assets of the former company out of bankruptcy for $30 million. And 4 years after that, he sold Data Return to Terremark Worldwide in a transaction worth $85 million. So he did that effectively by buying at the bottom. He bought a distressed business. And there's going to be opportunities in our sectors with businesses going bankrupt, perhaps, or employees becoming available, or potentially equipment that we may be able to acquire low. So it doesn't necessarily have to be about an acquisition of a bankrupt company. But hopefully, if we've all taken advantage of things like C-bills and bounce back loans, then we've got an opportunity to think about using this money wisely to strengthen the business, and looking for opportunities to buy low would be something worth thinking about doing. So a couple of businesses that we're working with are definitely looking at that acquisition strategy and thinking about, is this the time now to think about maybe growing by acquisition and buying a business? Is it a good opportunity to do that? But it doesn't have to be buying another business. So Hannah Hatfield, the lady who runs Make More Noise PR, she lives in Malvern, but the business is based in Birmingham. She's taking the opportunity to acquire commercial premises rather than continuing to lease. So she's looking at hoping to take advantage of the current market and the fact that commercial property prices are potentially a little bit lower than they might otherwise be. So it doesn't have to be about acquiring a business that's gone bankrupt, but you might want to think about whether there's equipment, whether there's people, or whether there's opportunities like think about commercial premises that might be interesting. So that's challenge number 2, is around what opportunities are there to buy low in your sector. So have a think about that. Remember that there are a number of local grants around that might also be useful. So there's the Help to Grow grants in Worcestershire. And within that, actually, there's not just money that's available, match funding that's available, but there's also there's a Worcestershire, there's a graduate program if you want to take on graduates, but there's also a Worcestershire Jobs Match portal, which might be interesting to look at. And the idea of that is that there are staff. There are obviously some of us that might be looking to employ people, but there's also staff that are now available as a result of COVID. So the idea of the Jobs Match portal is to help to match up those opportunities. So have a think about that. So that's challenge 2. The third example is around pruning the business. So to concentrate on the most profitable products or services. So in 2003, the most common term that was used to describe the state of the economy was the jobless recovery. Certainly in the state, the year began with concerns, if you remember, about the war in Iraq, and the Dow Jones industrial average fell below 8,000 in February. Mortgage rates plunged to a 30-year low. and lots of homeowners were rushing to refinance. And it was time when George Bush was in power in the States, and he cut taxes, hoping that consumers would start spending. And it was against all of that backdrop that this gentleman, Joshua Dick, took over his father's company called Ernex. And at that time, it was generating less than $1 million in annual sales, and it was across 7 product lines. And what he did was he retrenched the business, and he jettisoned 6 of the 7 product lines to focus the limited resources, because we've all got limited resources, on the one product or the one area that Dick thought had the potential to scale. So he went from 7 lines and being maybe average at all of those 7 to concentrate on one and being really good at that. And that was that niche that he went for was cleaning supplies for commercial coffee makers, which sounds like a pretty narrow niche, isn't it? It's a niche of a niche, really. It's not even just coffee makers or commercial. It's cleaning supplies for commercial coffee makers. And of course, that was a big decision, because it wiped off a fair chunk of revenue off the business initially. It wasn't even the largest of the 7 products at the time that they had, the product lines, either in terms of revenue or in terms of profits. But it was, in terms of margin, it was very good. And Dick saw that it represented a reasonably big opportunity, a sizable opportunity, but equally importantly, that they could capitalize on it and they could build a positioning which was very, very strong in there. So it's a little bit coming back to example 1, where we're talking about focus, and using that to trim down and prune down. And he created a really strongly differentiated position in that one sector. And they poured all of their limited resources into becoming the best in the world at that one thing. And ultimately, he grew Ernex to more than $5 million of EBITDA. So in terms of the net profit, essentially, he grew that to be £5 million of net profit. And he then managed to sell the business for a double-digit multiple in terms of and several million dollars. Now, more locally in Worcestershire, one of the businesses that we work with, it's a road haulage firm making over 500 deliveries a day with 35 different vehicles, is undergoing a similar exercise. I'm not, for confidentiality reasons, I'm not going to give the name of the company, but as a result of the pandemic, they've analyzed all of their routes and they're pruning down to one main route where they feel that they hold a strongly differentiated position and they're able to make superior profits within that area. I'm just going to pause for a second. Louise, are there any things in the chat that we need to be aware of? Anything that I need to address as we go?
Nothing in the chat at the moment. So what I will do is take this opportunity to say, guys, there's a chat box there. If you've got any questions or thoughts or any observations that you'd like to share with everybody or with us, please just chat away. And then if there's anything that comes up, we can bring that to attention and perhaps maybe find an example that fits the particular thing you're looking for. Yeah. So yeah, chat away.
So I'll do a couple more and then pause and see if there's any questions, and then we'll handle the rest of the questions if there are any at the end. Okay, so think about pruning and think strategically about that. So challenge 3, what are your most profitable services and or products? How do they fit against the TVR framework? And I'm just going to show you what I mean by that in a minute, and what would be the impact, both positive and negative, on reducing the range. Because of course, it's not always just as simple as saying, let's take that example where he pruned 6 away and was left with 1. Some of those 6 would have been providing revenue and contribution. So you've got to think very carefully if you do prune that you're not actually throwing away some contribution, that now the one that you stick with just can't cover all the overheads of your business. So it's not all easy to do, but it's worth thinking about. The idea of this TVR exercise, which you might want to consider doing, is that there are 3 key criteria that define whether a product or a service is scalable. And those essentially are whether it's teachable to employees, so it doesn't, in other words, they can deliver it in your place. It's not totally reliant on you as the business owner. Is it valuable, by which we mean is it truly differentiated? and is it repeatable, either in its own right, or does it lead to something else that is repeatable? So that's the TVR, and it's a useful exercise to list out all of your products down the left-hand side and then score them. It doesn't really matter what out of, but score them out of 10, for example, against each of those criteria. And it's not actually really important whether you give something a 7 or an 8. It's the relative scores that you're after. Okay, so if you do one first and then everything else is relative to that, and then in the ones with the overall highest scores ought to be the ones that you should focus on, and the lowest scoring ones should be the ones that you should consider whether to continue with. And if you combine that, if you really are thinking about pruning, if you combine that with a bit of a financial exercise to work out really where the profitability is, and it should really match this, but if you do the financials as well just to match it up, then great. But this is a really good exercise, nice and simple exercise to do, about which will help us if we've got too many products and services that we're doing. And often with a service business, particularly perhaps, we can be guilty of doing all sorts of things. We gradually extend what we do, and many of them perhaps are just not truly scalable in their own right. So we might be better off pruning it back down to the ones that are. So that's an exercise to think about. So our fourth example goes back to the Great Recession in 2008, another time of massive disruption with stock markets dropping hundreds of points every day, banks failing. And many people, including John Moore, thought that the world as we know it might be coming to an end. I think some of us feel that might be the case now as well. But anyway, Moore, so he was the founder of a company called 3D for Medical. And that was a company that created three-dimensional models of the human body, photographed them, and then licensed the image to textbook publishers. So for medical journals and all sorts of other publishers for medical textbooks, medical books, when they needed those images. When that recession, 2008, 2009, hit Ireland, his business took a really significant turn for the worse, and he realized that he needed to reinvent the company to do something different. So he decided to develop an app, essentially, for students that they could use to then learn about anatomy. So instead of focusing exclusively on textbook publishers that he was, they started selling their app directly to students, teachers, and also to medical professionals. And the business began to do really well then, as more universities, including the likes of Stanford and Cambridge, signed up to the service. And he grew the business by 2019 to 75 employees, and included in that was a really good, strong management team, which is when one of the biggest textbook publishers in the world then made an offer to buy 3D4 Medical for $50 million. So he turned around that business, or really from a point where it could have gone under, but by thinking strategically and considering a digital product, that he was then able to do really well with that business. And if we think about more locally, there's a business called Platform 81. Some of you may know, and I've interviewed Gary for Scale Up Radio. He actually set up Platform 81 in the middle of recession, and Gary reckons that was one of the things that really set them up for future success. But they were hit hard by the initial effects of the pandemic. They've got offices in Manchester and also in Bromsgrove, and they provide website and SEO services. And some of their larger clients, particularly for the SEO services, are in the gym and hospitality sectors, two sectors that obviously were hit really hard. So Gary realized that there was an opportunity to help fresh food companies that had perishable stock, such as farm shops, for example, to get online with a simple e-commerce website and to move their model online. And that's what they did. So they had, in other words, they had excess stock, if you like, that had short-term shelf life on it. They had to get rid of it somewhere or other, but they didn't have people coming into the farm shops. And that's what Gary did. So he set up found a digital solution to an opportunity that he spotted, It was in their field, if you like, it's something that they had the capabilities to deliver on. So he brought the two things together, and they've been able to then develop a different arm to the business that has been profitable and has helped them to come through the current crisis. And now, of course, some of the gyms and things are starting to come back, so the rest of the business has come back. So challenge 4 is around considering digital. What opportunity is there for your business to become a bit more digital and to address different customer groups? Okay, that's challenge number 4. Let's do one more and then maybe think about some questions. So number 5. So this goes back to 2010. Chap called Griffin Thor was finishing his final year at San Diego State University, trying to work out what to do with the rest of his life. And he spent pretty much the last of his savings on a graduation trip to Costa Rica. And he crossed paths with 2 bracelet artisans, and they were living in poverty essentially, but just making and selling bracelets to people, just tourists and the like. But they were beautiful, colorful, handmade bracelets, and Griffin felt that they seemed to capture the essence of their journey, really, of Costa Rica. And so he took the last few $100s that he had literally in his bank account, and he asked the artisans to make 400 bracelets. So he used all of his money to get them to make 400, and he returned to San Diego and got to work trying to sell those bracelets. And they built a very simple website, took orders online. They didn't put any money into advertising. What they did was they made it a lifestyle brand, not just about a bracelet, but they made it a lifestyle brand. And they created what you might almost describe as a movement, really, resulting in a tremendously strong and loyal customer base. So they did that all through social media, and over the next 9 years or so, he built that company, which by the way was called Pura Vida, into, you won't believe this, for bracelets, turning over $68 million, right? With the supply continuing to come from those 2 original artisans in Costa Rica, and who now back in Costa Rica employ more than 1,000 people. And in 2019, they sold a 75% stake in Pura Vida for $75 million in cash, plus a £22.5 million earnout, which equates to something like 9 times that year's adjusted EBITDA. But just the fact that you can create a business of that magnitude and be worth that amount of money from essentially bracelets, it just astounds me, frankly. But that lesson there to think about is around leveraging social networks. So as I say, they started that business with no money. They weren't spending, it wasn't pay per click, it wasn't paid advertising or anything. They leveraged the power of social networks. And in times like this now, we know that there's a lot going on social networks. I think a lot of us are thinking about how can we use LinkedIn better, maybe how can we use Facebook, all of those things. So definitely a good time as to how can we think about leveraging social networks to do that. And more locally, closer to home, then there's a chap called Wasim who runs Waz's Bistro. Some of you may know it. It's based in Bromsgrove. And what he tries to do, and I interviewed him for Scale Up Radio, he's tried to bring a piece of the Mediterranean to Bromsgrove. Not Costa Rica, but the Mediterranean. And it's much more than just the food. So he's created a whole experience. This is prior to lockdown, if you go back to that for a minute, a whole experience around the food. So it's not just the food, it's the whole experience. And it includes things like language evenings, with country-focused tables. So you might have a table of people speaking Italian, table of people speaking French. Waz speaks French, his wife speaks Italian. So they have evenings, language type evenings, and the children also are able to help in the preparation of the food. So it's that whole experience. So they've got the children up, chopping up vegetables and whatever, and helping to prepare the food. So he really creating that experience, but he'd also created a strong social media presence with a very active and loyal group of customers. And in fact, he emphasized very much, and if you listen to the podcast, you'll hear this. He talks about first people are customers and then they become friends. And when the lockdown happened, he wasn't, of course, able to host people into the restaurant. But he realized that he could provide the same experience, or a similar experience at least, in people's homes. So what he did was he leveraged his social network, and he also developed a home dining experience where he would deliver the ingredients for his signature dishes, along with FaceTiming the preparation, so people could prepare the food together and converse with each other, including in different languages. So in other words, he used the power of, well, the internet, but the fact that he got a loyal group of customers through social media that he created, just to try and keep some of that experience going, not just to say, oh well, I can't have people in my restaurant because I can't, social distancing, I can't do it. So he's stuck strongly to what his aim was, what his purpose, what he really is passionate about, and thought about how can he deliver some of that experience at least still to people when they're in their homes. So that's Wasim or Waz from Bromsgrove. So that fifth challenge is around how can you leverage the social networks rather than spend lots of money on costly marketing activities. All right, and I'm sure Wasim would be delighted if you looked him up, and he does home deliveries, as you know, and as I said, so I'm sure he would be delighted if you would try him out. So that's that one. Well, any questions before I go on to the sixth example, Louise?
No, everybody's been very quiet in the background. I think that the fact is that you're giving them so many different things to think about that there's a few head explosions going on.
And, there may well
packing
be.
It all in.
They may have to sift. Let this settle and sift. So we're throwing lots of ideas at us all here, but hopefully things to think about. That maybe there's one or two takeaways that you can think, actually, maybe we can think about that a bit more in our businesses. So this example goes back to 2012, again, sort of restarting after the Great Recession. There's a lot of quantitative easing around. The unemployment rate was something like 9%. And a gentleman called Atta Suleiman co-founded an IT services company called Flux 7. And he started with his partner, and he refers to himself as two smart guys with laptops, and they would take on any project. They literally did the thing which a lot of us do, which is somebody's prepared to pay us some money to do something, we'll do it when we start up our business. But they quickly realized that they needed to focus a bit more and try and become the best at one thing. And they decided on becoming experts in helping companies to migrate their technology onto Amazon Web Services, AWS. I'm sure there's one or two people in this Zoom session, maybe like Mark, that know exactly what that's about, and there'll be one or two of them like me that don't really know what Amazon Web Services is. They just know the acronym. But that focus created a domino effect, which meant the more that they focused their marketing, the more that they attracted companies that were interested in AWS, and they would turn away work where a company wasn't interested in migrating to AWS. Which meant they were able to say no to wrong fit companies and reserve their limited resources, in this case their sales resources, for people who really wanted to leverage Amazon Web Services. And they also found that focus accelerated their referrals, which in turn fueled their growth. And by 2019, they'd got 70 employees, and they were then in turn acquired by NTT Data, which is a Fortune 500 IT giant. Now, one of the other things that they did was they backed the right horse, because of course AWS, Amazon Web Services itself, has gone through phenomenal growth. So they were kind of tagging on to the coattails. So to an extent, they grew on the back of their success. But what they did, a little bit like that initial focus example, they started off broad, but then they focused down. So they narrowed the hourglass, if you like, down to what it is that they were going to really focus on. So again, similar lesson, but how can you narrow the hourglass? And perhaps, is there, if you were to do that, is there potentially a strategic partner that you could grow with, whether it's tagging on their coattails, a little bit like he did with Amazon, with AWS, or whether it's a bit more of a partnership model in some respect. But can you, by narrowing the hourglass to identifying really what your focus is, would that enable you perhaps to partner with somebody or identify a strategic partner to grow with? Okay, so challenge number 7. So this is now about investing in ourselves or our teams to come out stronger. And there'll be lots of examples of this during lockdown. This particular example concerns somebody called Scott Moore. He lost his job in 2012 in a restructuring. And he decided to turn his own individual crisis, if you like, into an opportunity by starting a restaurant. And he started out with a friend of his in Jacksonville in Florida, and they called it the Maple Street Biscuit Company. And they offered what they referred to as comfort food with a modern twist. And he invested a chunk of his life savings in the first restaurant, and it was a success. And then a second store also worked equally well, and then a third. And he was getting pretty confident now. And he then wrote a business plan for a massive expansion, which called for building 25 locations across the southeastern United States in just 18 months. And to fund the growth, he put everything on the line. He put his house up as collateral on a bank loan, and he personally signed the guarantee that if it had all failed, would have left him completely bankrupt and penniless. But as it turned out, the gamble paid off for him. And another restaurant chain called Cracker Barrel acquired Maple Street in November 2019 for $36 million in an all-cash transaction. So this example is around think about investing in yourself, maybe not quite to the extreme that Scott Moore did, but is now the time to think about investing in yourself in that expansion side, maybe, but also investing in your teams or in the equipment. Combine it maybe with the idea of buying low that we looked at very early on today. But can you invest in yourself in some way to really take your business to the next level? And more locally, closer to home, a gentleman called Richard Cox. Some of you may know him. He runs Langley Business Systems, and they provide EPOS, or electronic point of sale solutions, to the hospitality sector. And it's a very successful business, or it was before lockdown, with thousands of customers all paying a small amount of money on a regular basis. But that almost completely dried up at the beginning of lockdown. It's all in the hospitality sector, pubs and things like that, pubs and clubs. So Richard took the decision to close the doors until things picked up, and he furloughed all his staff. And you might forgive him for taking a bit of a break, but instead he decided to look at his company from the ground up. He saw it as a chance to look at the business, its image, its systems, its structure, everything that looked at what he could change and improve, so that when he reopened the doors, it would be stronger than ever. And that's what he's done, and things are starting to open up again for him. But he also, whilst he was doing that, he's ended up starting a completely new business as well, which is now looking like it could be even bigger than Langley Business Systems was originally. So he's literally closed his doors, but then started a new business during lockdown. So that lesson number 7, or challenge number 7, is around what opportunities are there to invest in yourself or your team to emerge even stronger. Are there specific aspects of your business you can invest in to restructure the way you do things, and perhaps make use of the loans and grants and support that's available that we've discussed. So we've got one more example to do. I'm conscious that we're nearly at 1:30, so we should just about do it, but maybe a couple of minutes over, if that's all right, if you're able to indulge me as we go. So the final example looks at a couple that were stuck at home in 2017. They're Canadians. They found themselves living in Berlin and stuck at home with not very much in the way of a social network within Germany. And so as Danielle Simpson decided to teach English as a second language over in Germany. And her partner, a chap called Arvid, noticed that she was struggling to complete the feedback forms and the reports for students. Most of the report cards were really similar, yet she was wasting loads of time retyping them out every single time, and often identical messages about dozens of students every night. And Carl, as a software engineer, thought, that's silly. So he saw a process ripe for automation, and that's what he did. And he built a little tool that allows teachers to select from a list of pre-scripted student feedback options that accelerate the process of providing comments about students. And they realized that tool might help other English teachers, and they offered it on a subscription basis, but they did it through Facebook, through a Facebook group that Danielle belonged to, which was set up specifically for expat teachers. So it was within that community, that online community for expat teachers. And 2 years later, this is not a $1 billion type business, but they created $50,000 a month in terms of recurring revenue. So it's still a pretty significant business, and they decided to sell that business to a company called Shore Swift Capital that made in a life-changing transaction for them. So that's around leveraging virtual groups. So and again, more locally, to use a local example, it's a lady called Sandra Garlick I interviewed. She's based in Warwickshire, and she's made extensive use of Facebook groups both pre and during the lockdown, and rather actually than leveraging an existing group, Sandra set up her own group aimed at inspiring women in business to recognize their own achievements and those of other women, and to celebrate them. And she's now built this into annual awards and an annual book celebrating the achievements of women in business. So, and she's done most of that, or a lot of that, through using and setting up her own Facebook group and developing that. So that's the final challenge: is what opportunities are there for you to leverage network effects, essentially, for your business? And they could be physical or virtual. They don't have to be virtual. But what could you do? And they could exist already, or you might decide to create them from scratch, like Sandra. But how could you build network effects into your business and make use of groups of like-minded people? So that's the final challenge there. So just as a quick summary, 8 examples we've gone through. First of all, do one thing, do it really well. Focus down on niche, do it again, find your hedge. What opportunities are there for you to buy low or invest wisely now? What opportunities, are you spreading yourself too thin? Is it time to do some pruning in the business? And remember the TVR exercise. Could you digitize your service or your product, or can you capitalize on a new trend perhaps by digitizing? Could you leverage social networks instead of spending heavily on paid for marketing? Could you, or how could you narrow the hourglass and perhaps grab onto the coattails of a strategic partner or the next big thing? Is now the time to invest in yourself or your team, perhaps in restructuring the business completely? And how could you create network effects by leveraging virtual or physical networks? So I'll bring you back to Winston Churchill's words: never let a good crisis go to waste. try to step back a little bit from the urgent. If you've done the basics now of protecting the business, which I'm sure you all have, but in terms of what you can control, now's a really good time to step back a bit and think about how you can reshape things. Maybe think about these examples, getting yourself out of that fog of war and starting to create a little bit of space for you to think about ways that you can emerge with a business that's even stronger than ever. So that's all I have to say today. Have we got any questions? Have I thrown it open to the floor for questions?
There are no questions in the chat box, Kevin, but you never know. Somebody might have the courage to pipe up.
Yeah,
Kevin, I'll ask you a question.
John, yeah, go ahead.
Around timing, really, because looking at the eight activities there that you've got, I've done about 6 of them out of and I think I'm now looking at the time to sort of move things forward, because I've completely changed and selected one item that I'm doing. So I suppose it's all about it's the time taken to actually start to build up everything and get things up and running, that it's working for you. And I think that's the key thing for me, is all these 8 items don't just happen all overnight and start generating your income.
No.
And I think that's the challenge I've got now. I'm starting to do the networking. Melanie will be aware, because I've been to and got some things on there. But I think it's the speed is quite frustrating for most of us, that we want to get on and it doesn't happen overnight. It's just your thoughts on that, really, with the 8 items. Do you do them all, try and do them all at once, or do you work through them? Or?
Yeah, I don't. Yes, I'm not suggesting for 1 minute that we should do all 8. What I'm hoping out of that is that there might be one of those that we go, actually, you know what, that's something we really should focus on in our business, and we should think about doing that, and really do that. You can build in some of the principles and ideas maybe from some of the others, but we're Louise and Mel, I'm sure will back this up. We are very strong advocates about doing one thing really well rather than doing lots of things half-heartedly or half-baked.
Yeah, and I think I'm doing a few at the same time, because my idea, I've selected one item of something I've done in a wider range before. I've done whole program managing of work. I'm now selecting the start of projects and programs to actually get people off on the right foot, and then that can go to other people to do it, specialists in different areas. And Birmingham University have offered to fund the digitisation of it, and then they ran out of money. Right. So they're now going to do that next year, I think. But it's things like that. It's the frustration I think everybody will have trying to move a business forward, and even if you're trying to change, it's quite difficult. I don't know what the people's thoughts are.
Definitely, and do if you haven't already, do have a good look at the grants in Worcestershire, and in, depending on where you're based, and in Birmingham. There's some good things around now, that if you've got some ideas that you do need a bit of extra funding, there's some money around, which of course, if you've got yourself a CBILS loan or a bounce back loan, you can use the two together. So you can almost double the value of your bounce back loan, for example, by getting a 40 or 50% matched funding grant if you've got a project that is suitable.
Okay, thanks.
All right. Any other questions? Brilliant. I think everybody's looking very dazed. So, yeah. All right. Good. Well, that's 8 ways to reinvent yourself. Some, as I say, as you saw, some examples of bigger national, multinational type businesses, but also some local examples there from people that I've interviewed on Scale Up Radio. The next one, which will be in 2 weeks' time at the same time, is around 5 surprising ways to rebuild the value in your business. So that's the next one that we'll do, and it'll be a similar sort of format to this one, an hour in length. So I look forward to seeing you on that, and also to picking up with all of you on the Elevate program, certainly, and talking about this on the one-to-ones.
No, all right.
What's that, Louise?
Nothing.
Good. Okay, any final comments, Louise, Mel? Nope.
No, sorry, I was.
Sorry, Louise.
I was just being asked if I knew where the dog had put the glove.
All right.
Joys of working from home.
Very good. Excellent. Well done, Louise. Good. Mel,
No.
anything you wanted to add to that?
Just thank you for joining us. It's great to see so many of you, and obviously those that are on the Elevate program or on other programs with us. Then we'll see you soon in your one-to-ones, and we can have a bit more of a chat about those themes and those challenges that Kevin has been talking about. So thank you.
Good. All right. We'll look forward to it. So we'll end the webinar now. Let you get back to your days. But yes, I like that. Thank you very much for giving up your valuable time and joining us today. See you soon.
Thank you.
Thanks.
Thanks.
Thank you.
God, the window again.
Right.